It's stronger. It is more resistant to corrosion, and it also has a potential capability to decrease their costs over time. It is in direct relation to what feedback we receive from the customers that we're putting this out. It's part of one of the reasons I'm heading to Greece next week is to talk about this with our number one customer and make sure before we finalize the design that he's happy with it and that this meets his needs.
Yeah. Okay. Thanks. Second, we got a projected budget for the years 21, 22, and 23, where the figures for 21 are around 12 million, for 22, 18 million, and for 23, 25 million sales of ballast water. How much are these figures out of the total market? In other words, what is the market share that you expect FilterSafe to have for these 3 years?
That's a great question, and I'm going to apologize in advance. I didn't prepare myself for that question. However, I'm going to say that historically, I have built our market share based on two factors. First, the percentage of the market that our customers have, which is important, and then secondly, based on the percentage of our customers' market we have, how they split between multiple filters. Our customers have a significant market share, and especially if we add Alfa Laval to that mix, which I strongly suspect that we will, they will have access to a very significant market share. Traditionally, we've had about 25% of the market. I think those numbers, the numbers that you're talking about, is really predicated on 10 to 20% of the 10 to 20% market share growth, going from where we are right now, which I think is around 10 to 12%, and then creeping up to 20, maybe a little more than 20% going forward.
And I'd like to add one comment here. Another factor which is hindering our progress or not assisting us is that really the Eastern manufacturers of ballast water systems are now much stronger than before. And, you take the three Western customers we have, which is De Nora, EcoFlow, and Elma. The two American ones are really suffering. It's very, very difficult for them to compete with the prices and what the Eastern companies can offer. And we know what's happened in the East. We sort of lost Sunwoy. We might be able to get back. We will know within the next month or two if the door will be opened a little bit. And with Tecros, we are definitely the only supplier they have. And we are really depending on them to sell more systems with filters. So that's a factor that very not to sneeze at. It's a very serious factor.
Okay, thanks.
Well, if I look at the business going forward, ultimately it's going to be the new build business, and I do understand a lot of that's in Asia. Sunwoy is one, obviously it'd be great to get them back. Tecros, it's great that we've got some progress, but what about other Asian companies? Who are the others out there? What are we doing in terms of, or is it worth trying to go after them? What's your thought about them?
Yeah, so that's a great question, and I think I want to talk. So to answer your question directly, the other primary Asian companies that we're dealing with, PanAsia is a UV manufacturer. They're a very significant player in the game. Then you have, their name is not just jumped out, JFE, the Japanese chemical injection company. They're also very significant. And then to a limited extent, there's a couple of other players. There's a couple of the Chinese players, Saeco, and then Sembawang and others.
Costco.
I think Costco has a system as well.
Samsung.
Yeah. And then you also face, as Itai says, the new build shipyard systems. So Samsung, DSME have their own system. Not DSME, sorry. Hyundai Heavy Industries has their own system. So they're difficult. At times they're difficult to play with. And what we're trying to do is to drive the two primary players, Sunrui and Tecros, because Tecros particularly is one of the leaders and is the leader in the Korean market. And so if we play our cards right with Tecros, we can start to lead them with them. We've had some success with Samsung. They were very interested in our filters, and we had a demo trial set up that has gone a little bit cold. We're trying to work with them to get into their shipyard because, again, being into the shipyard systems is really important. Hyundai is notoriously difficult to deal with because they have their own internal engineering and production. During my time with Korea, during my time with ABS, I actually spent 3.5 years in Korea working at DSME and Samsung Heavy Industries. And so I have a knowledge of that industry. And we've identified a potential candidate who is a former ballast water product manager. He's Danish, but he speaks fluent Korean, who could potentially be a driver for us if we're starting to make a heavy move into Korea to be able to go in, be our on-the-ground resource, and be able to talk with Koreans directly and be a firm face and a firm force for us, because that's extremely important with Koreans to have somebody in Korea, somebody that can speak with, somebody that can come down, go out to dinner, and that drives a lot of sales. And so we're really looking to that as a growth strategy in the midterm. Obviously, not right now. We're trying to put the glue on the bottom of the boat and make sure that we're moving forward. But that's really a growth strategy to be able to penetrate that market going forward. The other thing that was not readily apparent about the BSU filter is that the number one ballast water filter in the UV market by far is Filtrex. The BSU filter is designed to be a direct bolt-in replacement for the Filtrex filter. It is actually flange to flange the exact same size. And we are aware that the market is starting to become aware of Filtrex's filter issues. They have some very significant technical issues with the mesh on their filter in the pleats becoming broken because of the flexing of the pleats during operation. It's very difficult to see, but it's very much there, and the regulatory community is becoming aware of it, and the shipping community is becoming aware of it. The cost of those elements, because I work for Hyde Marine and we use Filtrex, I'm very familiar with what the cost of those elements are. They're extremely expensive. And that's part of one of the things that we're looking at is trying to create a filter that is profitable to sell at or near the element cost of the Filtrex filter to be able to go in to ship owners and replace, because there's aspects of that pleated design that cannot be fixed with material or with a better design. It's just an inherent problem with the pleats. And so we see it as a huge opportunity to catch a bounce market of people that installed Filtrex filters that are not going to want to spend $12,000 to $15,000 every 2 years to replace those elements. And so it's another aspect of how we expect to drive sales in ballast water going forward. So I hope that answered your question.
I think so. I know we've got the rest of the meeting to get on with, and I do have some more questions for you, Mark. So maybe we could pick it up on a subsequent call.
Yeah, that would be great. Yeah, anytime. Just reach out.
Okay.
Sorry about the pacing and everything. Anybody else has any questions, please feel free to reach out. And I'm happy to answer whatever I can. And then, in a time, or Mayan, I think you'll get a copy of the presentation to the group.
Yeah.
Okay. Excellent. Any other questions for me?
Yeah. I would just suggest if there are any questions that people have, obviously Mark is available for a phone call, but just to allow all of us to learn and know everything together. If there are questions, if you send them to us, then we'll distribute them and share the answers between everyone.
Okay. Thank you, Mark.
Thank you very much, Mark. Thanks a lot.
Right. Thanks all.
All right. See you later. Bye. All right. I have a question for you, gentlemen. Do you want to start by talking about numbers, or shall we start talking about some management decisions we made here lately? I mean, they are related, but where do you want to start? It doesn't matter for me. Alex, what do you think?
Then by numbers, you mean the budget?
The budget and the 5-year term and all these sort of painful issues.
Let's start with it. Okay, let's start with the budget, and then we can talk about how management is responding.
All right. So what I'll put on the screen now the 5-year budget, and then later we'll drill down to 2021 budget. Is that all right? I'm just looking. Where would it be? Screen. Presenters mode. Oh, this is not the right one. Here we are. Can you see? Can anybody see the Excel?
Mm-hmm.
All right.
We see a picture.
Oh, you see a picture? You don't see the Excel?
No. But it may look better than the Excel.
Oh, all right. So let me see, what do I do here? I'll do sharing again. Oh, hang on. Microsoft Whiteboard. Mayan. Stand out. Content only. Include computer now. I hate Teams. Mayan, how do I do it?
Click on the 3 dots. And more actions. I think. No, sorry. You click on the one on the.
This one.
The arrow next to leave.
Yeah, that's right. That's what I did. And
click on window.
Window. Screen. Window. Okay.
And then you should be able to
here we are. Can you see now the 5-year budget? Or what
Okay.
Okay. Okay. Look, you have here the history. No need to go back to it. The most standing out number is the loss we're going to make this year, and we'll talk about it in a minute. Our budget for next year is to go to $29 million sales, and later on 38, and afterwards we'll start itching back up again. But this is what we are predicting now, and that's the outlook for the next 3 years from what we believe will happen. Quite a lot of it will not be ballast because we have very interesting things happening in the non-ballast segment, and but this is the picture. I don't know if there's a lot to talk about, but as you can see, and if we put it on a graph, it doesn't look very pretty, but that's what it is.
I have some questions/remarks. I figured out, or I computed the percentage of the sales. I'm talking about sales, the ballast versus the total ballast, the total sales. So in 2021 on this forecast, the ballast water is 60% out of total, 12 divided by 20. In 22, it is 62%, and in 20, based on these figures, it is even 65%, which actually means that the percentage of the sales of the ballast water out of the total is increasing in percentage-wise. So again, I come back to the question, what is the profitability on the ballast water and what is the profitability on spare parts and non-ballast? Because here we again have figures in total. I think in a way we just have to accept them, but we don't understand, or I don't understand, what is the profitability? Where should the company put its main resources behind? To what extent the total of the cost of sales refers in a higher percent to non-ballast than to ballast. This is something we've been asked for about years. And again, here we get some figures which also change in the middle of the year from, and go down by 50%. And it's nice to have a budget, but how can we analyze it? How much can we be sure that this is a realistic budget?
You can't be sure it's a realistic budget. It's only a budget, and that's why it's called a budget, and it's a forecast. If I may remind you, the last week of March, we had a board meeting where we presented a different budget. We agreed then that we will review what's going on in the marketplace and what's going on in the company, and we'll convene again the first week of July, which we are doing now. The figures that we are showing now are the most updated, realistic numbers we can come up with. We've spent quite a lot of time on it, and that's what it is. Now, to answer the first question, which is a very good question, what the profitability on each one, I can't give you a figure right now. I can tell you for sure that the spare parts, of course, has very high profitability. The profitability in the non-ballast and the ballast, without checking it, but I promise to come back to you, and it's recorded now, what is the profitability for the ballast and the non-ballast. I would like to suggest that it would be fairly similar because prices in the ballast water are going down all the time. We are under enormous pressure to reduce prices, and we've done it quite dramatically this year in order to sell whatever we do sell. And I think Mark touched on it very clearly and very openly.
Okay, one more question, and I put it in writing and sent it to you a couple of days ago after we received these figures. We have the investment in Aqua HD, in Maayan Tech. We have perhaps an issue with the inventory, to what extent you may have stocks that are will not be able to be sold. On an accounting basis, you have to write those down the moment that the investments or the stock has no value or little value. Did you make any reserves in these 21 figures for those? And if not, are you sure that you don't have to write anything down by the end of the year?
Okay. First of all, the answer is no. We haven't done any adjustments. We haven't done adjustment for Aqua HD. We counted it as neutral this year, not under and not over. But I think, Micha, you should answer the provisions question.
So, for in 2021, Aqua HD is pretty much closed. It's not operating. We're investing something like $150,000 in this year, and it's not going to impact 2021 more than that. For 2020, we might need either 2020 or 2021 to write off the investment in Aqua HD. We will need to decide it when we will close the report for 2020. and that's going to be about $1.8 million write-off, which is not calculated in 2020 nor in 2021.
So that
As for Maayan WaterTech, we assume it's going to be balanced, like no effect on 2020 or 2021. The company is operating, and it should be around balance.
and the inventory?
Inventory, we don't have any significant dead inventory that we expect to write off.
So it means that if you decide and if the company is closed before you sign the financial reports, you may have to do and may preferably do it in 2020 because then
No, and I'll explain why. I think really, if you want to keep on talking on Aqua AG, let's do it and put other things aside. It's on the agenda anyway.
No, I don't mind. Sorry, I just asked. You gave figures, okay?
No, so we will not. The answer is that we will probably not write off anything in 2021. There are some legal issues going on with that company, and we will know, I don't know, maybe in 3 months, we might retain the IP, and so that's a different story whether we have to write off or not.
Yeah, but listen, if we are looking at a future exit, whenever, say in 2 years, then it is better to, if you have to do a write-off of $1.8 million, it's better to do it in 20 than to do it in 21. That's what I'm aiming at.
That's a valid comment. We'll have to consult, I think, our auditor and Yair as well, who is acting as an advisor on taxation issues.
Well, it has nothing to do with taxation. It is a write-off that you have to make. If you close the company, you have to do it one day. So if you know it now in this year, and you didn't close your books yet for 2020, you may, and ask the CPA about the options, you better do it in 2020. And then the 2.3 that we see here will actually be about 560,000 and not 2.3. Although the operating profit is not influenced, but you'll have a line below this of this write-off, and you'll have a 2020 figure which is around $500,000.
Jill, what's the reason? Why do you think it makes a difference between 20? What's the thinking?
Because the moment you do an exit, they look at the last years, and if you had a loss, then a year before, it has less impact on the valuation of the company in the future.
Correct.
Even under the circumstances, even under those circumstances, being a daughter company, a shareholding in a daughter company in COVID times, it's not explainable?
Why explain if you can put it into 2020? It's preferable. Find it out with your advisors, please.
Not only that, you reduce your taxes to 2020. If you do it in 21, you already have a loss. All you're doing is increasing your tax loss carry forward. You don't get the benefit.
Yeah.
All right, fair enough. I think it's a very good point to discuss, and we will start dealing with it on Sunday.
Okay.
All right. Do you want to dive in straight away now to the 2021 profit and loss? Oh, you want to the cash flow first, because the cash flow is here.
Let's look at the cash flow.
Okay. Micha, it's your go.
Okay, so Itai, can you go to Appendix A, please?
Yeah, sure.
So we have the 3 million.
Can you close some of those sections at the top so we can see more of the screen here?
Oh, right. Yeah, fair enough.
It's a little on the right hand side. There's a little arrow. Carrots.
This.
No, to the right.
To the right.
Yeah.
To the right?
Down.
Oh, here.
Yeah, there. Yeah. Okay. Nice.
Okay, so that has been made a few months ago, so it's not completely updated. Then we forecast a loss in Aqua HD and Mayan of $300,000, depreciation back on, and change in receivables because of the decrease in sales, so less sales. We assumed, and we still assume, that we will consume $3 million of inventory this year, so that will help the cash flow, and payable will go down with the buying because it's a slow year. So the effect of Appendix A on the cash flow would be $3.5 million. Most of it is the consuming of the inventory. Itai, you can go back to the cash flow.
Hello,
do we hold inventory at cost, or do we mark it up at all?
Cost.
Okay, thanks.
Itai, can you put the cash flow, please, on?
Yeah, sorry, I had to let somebody out. Here we are.
Okay, so we see the loss for the year forecasted, and the effect of pretty much consuming the inventory. We forecasted like $400,000 fixed assets or property buying, mostly machinery and things like that this year, which is not significant. We're going to have $1.7 million injection of cash because of the deal of the sale of the property. I think that I explained that in March or April what's going to happen. This is the deal is not closed yet. It's in the final stages, and it should be closed within the next few months. Again, the $150,000 investment that we made in the beginning of the year to Aqua HD. Long-term bank loans, principal that we will pay this year, $1.2 million, and we are pretty much even for the year. So if we started at 6.3, we could be around 6.7 in the end of the year. And the crucial number here is the consuming of the inventory. If we will be able to consume inventory, that will cover for the loss pretty much.
Can I ask a question?
Yeah.
Yes, you have in the middle year, the cash at the end of the year is $7.842 million.
Yeah.
Why is that not the beginning cash the next year? Why is it 6.343?
This is January 1st, the 3.3.
No, it says cash year end. This is year end, right? Year end 27.8, and then for 21, the cash at the beginning of the year it says 6.343. Line 25.
Okay, I need to check that.
It has.
That's a good question.
1 year must be the beginning cash of the next year.
You are right. Maybe that's a mistake here.
Yeah. Yair, not Yair, Micha, I have one remark. First of all, if you, Itai didn't put on the cash flow report on this slide, but if you look at the slide, the material you sent, it says on the top March 18. Now, March 18, you had the original report, and now you sent a new report with different figures, and it still has the same date. If in a year or 2 years we look at papers, we don't remember what time, which report we got. So please be careful with putting the right date on top of the report. Some reports don't have a date at all. So that's again about reporting. My second question is, how much is your cash at present? Now today, the 1st of July, more or less. Can you give us a figure?
2.2 million.
2.2? So how is there such a big drop in cash, and how are you so optimistic about the end of the year?
I'm really wondering about this question, Jules, because we are not selling enough. We are not getting enough takbulim in Hebrew. And of course, we are burning cash every month. And, that's the whole purpose of the meeting today.
Okay. Just wanted to know for the record how much it is today.
Again, the assumption is just that we will consume inventory around the same pace. We will lose money. So the cash flow will be around neutral. That's the assumption. Now we didn't do that yet. We're still on the around same level of inventory. So we need to consume it in the next 6 months.
So, okay, then I have a question that is related. We budget for 2021, $20 million in sales. How much did you sell the first 6 months? We just finished up.
$10 million.
10 out of the 20. So you're about 50%.
Yeah.
So actually.
And hang on, I'll just give you another figure. Our back orders is standing around 5.5 million.
5.5. So actually, you're not sure about the 10 million in the second half of the year, but you say that you have already 10 million. So is the collection so slow that your cash balance went down to $2-point-something million? Because it should be in line then if you sold 50% of the yearly budget.
Again, we lost probably half of what we expected for the full year, but we didn't burn the inventory that we should have. So that's what happened.
So but that's my
collection is pretty much okay. Not big problems with collection.
How much is the total stock now, inventory?
So we don't know really. We just counted the June 30 inventories. We don't have the numbers yet, but for
May, for April.
For March 31st, it was around the same as it was in January 1st. So
how much was that?
For the whole company, around $13 to $14 million.
For Israel and Hong Kong.
Yeah.
Well, okay, you better figure that out, whether it is realistic to believe that your cash flow will materially go up if you already sold 50% of the projected sales for 2021. Let's not go into it now, but it looks a little bit disturbing.
Okay, question. The backlog is presently 5.5. What was it at year-end 20?
Okay. Hang on a sec. I have to show you another file. Sorry. I'm going back here, and I'm going here, and sharing again. Oh, Windows. Wait, Windows. We were ready for this, and we have the slide. Hang on. Not here. Hang on.
But today's question is the backlog building or shrinking?
No, it's green. Sorry, I missed that. Here it is. Can you see it?
I'm looking at the red.
Are you looking at open orders?
Yeah, you're focusing on the red. Is this year?
Last year is blue. This year is red.
So it's dropped from. I can't see the bottom of that. I'm assuming the chart begins in January 1st. So it's gone from 7 to 5 million.
Okay. The same time last year is $9 million. At the moment, it's about 5.76 million.
Well, I was looking at the beginning of the year as 7.0, and now it's 5.7, right?
No.
8.6.
8.6.
Okay.
So my question is, if the back orders have dropped, by whatever the number is, 30%, 40%, how would you expect the second half sales to be flat with the first half?
Because we are very close to the market, and we know what's coming up, and not all the orders that we know we have won are on the system yet. We only enter an order when we get the official PO. An official PO is a week here, a week there, and all sorts of stories. And we believe there are some very nice orders on the pipeline, in the pipeline.
So the point is, you're saying that the backlog bottoms now.
I would like to hope so, yeah.
Okay, because we had this conversation 3 months ago and it was 6, and what we were going to see was monthly revenue numbers on the 10th of each subsequent month, and we were never given those numbers. So in order to monitor this, we need to see those numbers in real time.
Yeah. I'll add to that why it is important to know and be very hands-on, because I know that you did not return the loan from the bank related to the building that you sold. So you're actually having an extra loan, large loan, that if you would not have that loan, you would now be in a cash flow problem if you only have 2 point something in cash at the 1st of July. So I think you really, and I told you in that meeting 3 months ago that I'm forecasting cash flow problems because of the situation. And then we had a much higher budget than we have now. So I don't know what the bank will demand from you in this respect, and when they see the figures for 2020, how they will react. But I really should be very careful with how you manage this business.
Micha will answer it in a minute, but I want to say to you, Mr. Jules, we have no issues getting money from the bank. The question is whether we should use this money or take it, okay? And that's a totally different question. But we actually, Micha, do you want to add a little bit on the options available to us from the bank?
I think, first of all, I think that Jules is right.
Of course he is right.
He's right. And we have probably we can get money from the banks. Maybe probably we can. Again, the deal is not yet finished for the building, so that should inject another $2 million in, and that was forecasted in the cash flow. But you are right. If everything will continue to be the same, we might get into a cash flow problem. We can take money from the bank for short term, things like that, but we still have lines available. But we need to sell.
I want to add here something which is a lot more important than everything we talked about here. We can get loans. The question is whether we want to take these loans. And I think we should make a decision whether we are taking loans only if we are confident that 2022 will pan out the way we are hoping it will. And if we are not confident, we should be very, very careful.
So I have nothing to add to that. I made my point, and you manage the business. I just want to point out where there are areas that you should be very concerned about.
I think you're 100% correct. So that's something. Yeah, sorry, go.
I'm curious about the inventory, and it sounds like you weren't able to use much of the inventory the first half of this year. I'm wondering what's different about the second half of the year that will allow you to use the $3 million of inventory. And I'm also curious about quality of the inventory and if that stuff is up to spec or if there's additional work that needs to be done to get the quality of the inventory to where you want it to be.
I think I'm not confident about the $3 million Israel, but there are two issues with the inventory, big issues, or three issues. Number one, the inventory control now in our purchasing is much better controlled. No one is allowed to raise an order over $5,000 without a permission from Marianne or later on. Now it's actually our new COO that can authorize it. His name is Ofer. He is not in this meeting. So that's number one. Number two, a lot depends on how many orders we'll get for what we call the multi-filters. The multi-filters are the bigger size filters as per the presentation of Mark. And according to our predictions, it should be all right, but you never know. You know, no one gives you a blanket order for 6 months and says, we'll take it X, Y, Z dates, whatever they are. It just doesn't work this way, unfortunately. And another thing is that should help us is we hope to be able to use some or quite a lot of the screens that we have in stock after all the process that we've gone through, and reduce the free of charge screens that we've been giving to some customers in order to pacify them over the past problems. But you know, to tell you I'm 100% confident about it is incorrect, but I am optimistic about that possibility.
Alex, the big change here, which has been really hard for us to deal, and we didn't really foresee it, was the change in the mix, the product mix. So we have a huge amount of inventory for the multi-filters and for what we call the 24-inch screens. They also are the ones that we've had the corrosion issues with. So, and what we've found, you know, we've had trouble selling it across the board. You know, some of it is not our fault at all. Some of it is. But, you know, Irma First, who are a really strong customer of ours, they used to order a lot of multi-filters. And now we've noticed they're ordering mostly the 300 and 400 filters, which we didn't actually have a lot of inventory of. The majority of the inventory that you see there, it's a huge amount of inventory, is related to the multi-filters or to the smaller single chamber filters. So it's something that we couldn't foresee, and that's the reason why the inventory hasn't changed. It's not that everyone at FilterSafe doesn't know what they're doing and they're just ordering willy-nilly. That's not the case. Sure, maybe a few things have got through. I can't say, you know, I can't say that didn't happen, or, you know, I don't know for sure, but, you know, there are no filter bodies that have been ordered this year, which is by far, you know, the bigger ticket item in our bill of material without us knowing. It's just that they're all 300s and 400s. You know, the shipping costs as well are ridiculous at the moment. It doesn't really help us. When we're ordering inventory, we have to order it from our Turkish supplier that's 25% more expensive than 1Z. We don't have a choice. The reason why we think that it's going to change is, first of all, the budget, the numbers that you see towards the end of the year, it's very clear that we are being extremely conservative and pretty much outlining to everyone here that Irma First is going to be the mainstay and our only customer towards the end of the year, to the end of the year. And we will get, you know, they will replicate what they've done to date. And, you know, it doesn't get any lower than that. Mark doesn't like it. He doesn't agree. He thinks that, you know, he's far more optimistic than that. But that is our job. Our job is to outline the worst case scenario, and that's what you guys are seeing. Wärtsilä do a lot of multi work. They will get the multi filter screens. EcoClaw, they will get multi filters. Sunreef, they come on board, get back on. We will push them to use the E-Series, the multi filters, and they are a big user of multi filters, the high flow. And the same with Tecros. So, yeah, if we get more orders outside of what Irma First give us at the moment, then we will be consuming inventory. I'm quite confident.
I'd like to add one more sentence regarding the big stock. First of all, the large stock of filter bodies, which amounts to about $5 million, is a mistake done by FilterSafe. But I want to explain how we got onto it. We finished 2019 with a huge boom. We could not supply filters. The delivery time was really very long, despite the fact we worked here 2 shifts every day, including Saturdays sometimes. And of course, the mood was very, very different. And then we went on and made some deals with our suppliers. In November 2019, we had a little report about COVID-19 in China. And by February, the world was shut down, closed. And it's been like that for a long, long time. And, all right, maybe we should have been more conservative. Yes, maybe. But in the height of really in what happened in the end of 2019, we just had to cover, and hopefully we were going to grow by another $10 million in 2020. And, there were orders, we had to receive them, we delayed shipments, we did quite a lot of things. But the bottom line is that now we have $5 million worth of filter bodies that really should have been only 2 million.
Yeah. Well, I mean, I can't speak to whether you made the right decision or wrong decision in the past. I think the question is, we have these filters right now. What's the best thing to do with it? It sounds like, okay, there's some interesting channels, but are there things that we can do to maybe, do a big price cut and just get them out the door because we can convert them into cash, and cash is so
Alex,
important.
That's also one thing that we've done. So we have a huge amount of it's scaring you guys, but we have tens of the 804s, the 1004s, the big filter bodies. They're very expensive. We have tens of them. And so we've gone to Irma First and we've discounted them further. So there is an incentive now for them. And we know that we are 12% cheaper than Filtrex on those high flows. And also we know then that it gives Irma First a fighting chance to sell in the Korean market, with that type of discount. So, but unfortunately it doesn't happen overnight, right? It takes time for them to pursue the contracts. Obviously their project managers and sales team need to also endorse it and move forward with it. We'll hear more from Konstantinos on the 30th. On the 19th when we're there. But that is also part of the play. Is that we have discounted all those models.
The trade-off for that, by the way, guys, you can see in the projected PL is reduction in gross margin.
By the way, I'm not familiar with the market and the products, I don't know about it, but if you want to get Sunray back, you have this stock that is relevant for them. It may be, an opening to offer them at a large discount products you want to get rid of anyway.
Yes,
yeah,
absolutely, yes.
Jules, it's a good point, and we are prepared to do it. We've actually got 3 options in terms of the way that we will offer them something commercially. But at the moment, it doesn't have anything to do with price. Their problem with us, it's the way that we're servicing them. It's a few technical issues that they want to see answered in a particular way. And a lot of it comes down to the cultural element associated with the relationships. It's going to take a little bit more time. We have had some good indications from them that we're on the right track. But their middle management are telling us what the top management want to hear in order to get us in the door, to get us to have a meeting. They've already let us know that they want 8-week delivery times when we do come back. We haven't got to the point yet where they're interested in with that. We're not talking about the money with them. They already know that that's okay. Going to be part of the package.
Itai, if I may, since I have not so much time left, sorry, I have a cold as well. Could you talk a little bit about the management changes and the division of tasks between you and so that is that part. And if you have any just indications of another important piece of information, then please share it with me, taking consideration that I may have to leave within 10 or whatever minutes when my wife will call me that people have arrived here.
All right. Can you see the screen?
Yes.
All right. I'll answer the issues here that they really deserve a lot more time, but I'll answer them very quickly. There are changes at the top, at the management of FilterSafe. I'll go from the lighter to the heavier. We have a new COO. His name is Ofer Porat. We are extremely happy with him so far, and I think finally we got the right guy to run the operations here properly. Unfortunately, Micha, I call him Michael, is going to leave us, and the replacement of Micha is Yuli. Yuli is a CPA had been working with us for quite a long time, and a lot of the reports that you see from time to time are actually coming from her through Micha, of course. And Yair will will assist as an advisor on taxation and auditing issues. Mayan is going to look after very specific areas of the company, sales, engineering, marketing, etc., etc. It hasn't been defined completely between us. And I'm taking back the role of CEO. We might call it a different name, but I'll be dealing more with financial issues and mergers and acquisitions and whatever. But I have to say, we haven't finalized exactly the lines of responsibilities between us. It's been a very, very busy 2 weeks since I came back, and we just didn't have the opportunity to finalize it. Another issue I wanted to touch base on is the ERP system. We decided to go to NetSuite. It's a $450,000 investment, and we are suggesting to delay the implementation of it due to the position of the company. Unless we'll be able to fund it one way or another, and at the moment there is no solution, so we decided to hold on with that. It's a very sad story. I know a lot of people here got a lot to say about it, and by all means, please come back to it in a minute. We have cut a lot the marketing budget. Initially, it was 1.2 million. We allowed an additional 200K to be spent this year, including wages. Aqua HG is a very sad story, and I have to give you a quick brief. The company has been insolvent now for quite a long time. We tried to reach an agreement with other large shareholder venture capital called Terra Ventures. The company also had debts of about 1 million shekels. Half of them are for FilterSafe. And we tried to convince them that they should give it up, their shareholding, and let us do what really required to be done in the company. As of yesterday, we couldn't reach any agreement with them, and now a certain process has started with some of the creditors, and the company will go through a bankruptcy process. And we are hoping to be able to obtain the IP and then restart the company again when it suits us. At the same time, I should tell you that there are about 5 million shekels worth of contracts to be signed by Aqua HG, or potential $5 million shekels. And I'm really sorry to tell you that I can't see any way how we'll be able to get hold of these contracts. And the process of dissolving the company and transferring the IP to us and operate legally seems very slim for the next 3 months, and I'm not sure what will happen in 3 months' time with these 3 large contracts. So that's Aqua HG. And Product development, that's important because you saw part of it today. We decided to restrict our product development into 3 different filters. The BSU, that now you know all about it. It required additional investment of 350K, which we approved here at the management. Because that's, I think you can understand now that the BSU is our future in the ballast water industry for the next 3-4 years. We also completing the design of a new line of stainless steel filters called Trident. This will be the bread and butter filter for our non-ballast markets, all our non-ballast markets. It's just about finished. There are 50 of them on order already, and filter bodies, and we are expecting very good things coming out of it. We already have orders from customers for these filters, and we decided to continue the development of that. Other R&D issues are on hold until we will be able to fund them. We have some very interesting sales project. That's part of the answer to what we discussed before. There are names here, Okamura 1 and 2, that 2 very large or fairly large contracts we have. Okamura is a Japanese company which is putting some sort of a plant. Maayan can say more about it, in Thailand, and we won the orders there. There is Maari 3 is a $3 million contract for oil and gas with good margins for a change. So that we can't refuse it anyway. It's in the final decision point. We are hoping to get an order this week, but you know, it's always another week, and there's always something else to delay the PO. We are working on a very large project in Singapore, water treatment plant called Stuart. There's another project with Samsung in the Far East, the Zebra Mussel project, which we have sold already and it's being assembled now, is going to the United States. And the last one is the most interesting one, is one of the largest desalination plants to be built in Israel within the next 2 years. It's in Western Galilee, a stone throw away from us, virtually 15 kilometers away from us. IDE is the leading bidder. IDE have asked us to give them exclusivity on the fine filtration project there. It's about $2.5 million project with an ongoing 10-year service contract, and we are yet to see how it will pan out, but it does look very good. We don't need to spend money on it now, so we decided to keep it alive, but these are the projects we are working on. Personnel-wise, 10 people have left the company this week, bringing a total of 25 employees that are no longer with us worldwide. The Hong Kong operation is being reduced to 3-4 employees, and we are moving away from where we are to a smaller facility. That's in the process of being done. We had to let go here some very important and dear people, dear in the sense that they are dear to the company, not that it costs a lot of money, but they also cost a lot of money, but people that had been with us for a long time. And unfortunately, we had to make these decisions, and you can see why on the profit and loss.
Sorry, Ty, I really have to leave. Sorry to interrupt, but my wife is already, came twice to my room. So I have to leave. Well, I wish you success for the rest of the year, but I really want to stress that please, reports should come to us in due time, and please make decisions based on economic sense. I mean, we now heard about some of the projects and what happens and the situations we're in. I really saw this coming when we talked in February and April, and here we are. So don't be too optimistic, be realistic, and make decisions based on economic sense, please.
Okay. So three more words before you go.
Yeah.
We will send monthly report, which will include cash, sales, and open orders. Okay? Every month, you guys will get it. All the board members and also yourself, Jules. Okay? So that will happen from now on. And there'll be another board meeting the first week of October, I guess. And we'll keep you we'll send you all materials we can all the time. We are only acting now on financial basis and economics. And you can see it, if you have a good look at the report that I sent you, which I'm reading from now, you see that there are very tough decisions being made there.
Yeah. And if you have any major announcements still to make when I won't be here, please send me a summary or since you're recording, you can send me the recording if you want, so that'll be in the picture. Thanks, and all the best to all of you. Bye-bye.
Thank you.
Thanks, and happy birthday.
Yeah.
Right.
Yeah,
happy birthday.
Happy birthday, yeah.
Okay.
And I'm quite late for another call too, so I'm going to hop here.
Okay. All right.
Sorry
So maybe we'll call it a day, and we can talk a little bit on emails if required.
Yeah. Okay. Sounds good. Thank you.
Thank you very much, gentlemen. Thanks a lot.